The broader market's all losing more than 1% yesterday as tensions between Russia and Ukraine escalate. The Dow's now 9% from its highs. The S&P 10%, the NASDAQ 17%. Joining us now, Stephanie Link, Chief Investment Strategist and Portfolio Manager at Hightower. And there's names, individual names, some of the biggest flyers, which are down a lot more than just 17 or 20 or even 25, Stephanie. So we had the developments yesterday and over the weekend, and then people look at those developments and try to figure out what the Fed's going to do, and a lot of people looking at energy prices and inflation and how that's impacted. So there's a lot to put in a blender and see what you finally get. What do you come up with? What comes out of the blender?
It's not easy, Joe.
Yeah.
It's not easy. I'll tell you, I've been doing this a long time. There are so many moving parts right now. Clearly, we're having the relief rally this morning because we did get oversold. And it does seem like we have some sort of a game plan for Ukraine. We'll have to see how that works out. I don't think we're out of the woods, though, because I think we've got to get through the Fed. We still have a lot of inflation across the spectrum. We have to wait probably for the Fed meeting just to get kind of a clue, a tone from them. We know they're going to be tight. We know they're tightening. Is it 4? Is it 7? We don't know. I think that they're going to be very data dependent. So that means we're going to have to be data dependent. Actually, the data yesterday was pretty good. It got ignored, but the PMIs were good and confidence was even good. But we got to watch the data, and then you have to watch oil prices, because does that lead to any kind of demand destruction? I think the consumer is fine. Jobs and wages, and as I mentioned, the confidence numbers yesterday were good. But higher oil prices will eventually hurt the consumer, and that's 70% of the economy. So we have to watch all of these moving pieces. The good news is, Joe, we just got through earnings. And what I like to do is I like to circle back at the companies that beat and raised and had good fundamentals and have good stories to tell, and their stocks are down. And so that's companies like McDonald's, that's companies like Expedia, Hilton, the reopen names I still like within the consumer. What about Diamondback Energy? Last night they just reported, and it was a very good number, and they're committed to shareholder distribution. So I think you can find names, but you just have to make your list and be patient and not jump all in all at once.